Good morning, Forex traders. This is Vance Williams out of the Seattle, Washington area. Welcome to my live morning Forex trading show. And also welcome to the last month of 2014. I plan to have 4 shows this week, Monday through Thursday around this time. I do them a little bit different times, kind of whenever I'm ready. You're actually looking at my website right now, and I just wanted to show you that when you click on the show right here at forexautoWar.com, and you click play, you can also click be part of the conversation right here. I'm going to be posting other links and stuff, but you can see here that you can follow me on Twitter and get a notification a few minutes before the show starts, let you know, when I'm going to be starting. Also, you can go to my website here at forexautoWar.com, and there you can download free books. You can check out training programs if you're interested in that sort of thing. We have 3 new packages we're about to announce, so you can read about them here. And we've got something kind of cool coming up in a week or 2. All right, so moving out of there, let's, sorry about my cough. Still just kind of lingering just a little bit. I want to stress that what I do on this show is for educational purposes only. It's not intended to be, investment advice or to tell you where to get in a trade. I know that some of the newbies, because of my, 10 years of experience, I know some of you will think you can trade, but remember that it's not just knowing which way price is likely to go. It's also being able to manage your risk, which is, market conditions and knowing where to get in and out of the trades. In addition, the all important execution, which is training your mind to make decisions in a way that you weren't trained to do it in ordinary life. So, really, that's not just a warning. I'm trying, it's not just covering my butt. I really want you to be careful. In fundamentals today, the top story just about everywhere you look is oil. In fact, while I was walking on my treadmill last night, I watched a whole special on oil. So I've seen a lot of stories about that. That's what they've talked a lot about this morning. My take is simple. Let me turn my background down here. When the economic systems crashed in 2008 and the outlook of the future became very unstable, the experience money moved to everything that we as consumers have to buy or what we're likely to buy. This is energy, food, entertainment, and other commodities like gold, which historically rise in tough economic periods. In the past 18 months, as the U.S. economy has become more competitive, investors began unwinding those risk strategies. So though it might sting some, this is actually good news. And the biggest move came following the divergence we started to see from the central bankers speak in September. So they started changing their story where we started to see, the U.S. may be raising interest rates. The Eurozone and the UK probably aren't. And so this is what really kind of unwound some of those last major positions. And so that's I think probably the biggest reason for the drop. OPEC is not increasing production because there's been no shortage of supply, right? So they may have other reasons. I've heard some reasons about, other people in the region, I'll say. I don't want to pick on anybody, but the sound economic reasons have to do with the fact that there's just plenty of supply, and there has been all this time. This morning, we still have some high impact data coming out of the United States at 10 a.m. So about, I don't know, I guess that's about an hour and a half from now. Well, a little less than that. But anyway, so that could move things. Keep in mind that outside of, the most critical data, which is usually non-farm data or when we're all anticipating that the Fed is going to say something very important, outside of those extremes, whatever the high impact data is, it won't tend to reverse any trend that's happening today. So if it's a trend up, like you see on the pound, U.S. economic data is not likely to, even if it was very, very positive, it's not likely to reverse this sentiment up right now. Okay, so how you can use that is if it is very positive, it can give you a better price for entering a trade. Okay. On the top performing banks, my thought was that one of the top 3 was selling the euro. When I say one of the top three performing banks was selling the euro 100 pip range. Let me pop over to the euro here. Basically, I was just looked at this range of 2,500 down to 2,400. Basically, this is the range I think everybody's comfortable with. And my thought was that they were selling in the top third down to the bottom third. They got down to, well, I mean, all the way down to 24.18. So they got down to the bottom third. And they adjusted their stop for, a small profit or a no losing trade. I guess they did that for an opportunity to be part of this next leg down on the euro. They listed the trade as short term, so I'm not sure why they didn't close it out on a profit. But the fundamentals do not support a next leg down on the euro right now. One of the other top performers is trading the euro yen and the dollar yen. For sure, I'm considering adding the dollar yen because the fundamentals are so clear. But fundamentally, the central bank speak was giving the euro and the pound a lift over the last 2 weeks. We're just past Thanksgiving holiday. My thought was that it's likely to hold above these lows, these big lows, and I'm not going to zoom out, but you guys have seen it. Basically, given the end of the year that we're looking at right now, Christmas coming up and all that. Now, if something changes in the fundamentals, that'll of course change my my point of view. But right now, that still holds. Now, on the major bank trades, keep in mind that I cannot verify the information that I'm receiving about the major banks. So keep that in mind. I believe it's true, but inaccurate, but I can't verify it. So do keep that in mind. Okay, let's talk about price. What do I want to go to first? I'm going to go ahead and move back to the pound here first. And I'm going to zoom out a little bit because I want to show you this important price level right here. This is at about 57.34. We're zoomed out a little bit too much. So 57.34, it got above there last week and then dropped back down below in this area. And now it's pushing up above it again. And you can see that price tested this low and actually went a little lower on Sunday, on yesterday. So I wasn't, I mean, I saw this, but I wasn't real confident. I mean, everything is pointing to it's probably going to bounce here. But it wasn't a high probability trade. And so I let that one go. But anyway, let's move back to the 30 minutes. So you see this range and the pound's looking again to make a second attempt out of this range. And so let's go back to the 30 minute. Let's see what we got. All right. So it's, let me double check. I got two lines there. Yeah. So that's the second high. All right. Okay, so now what I want to do next is I want to look at this area and I want to see if potentially there's there were some trades in here. And the first opportunity that we have to trade is probably around 7 a.m. with everything kind of lined up for the money flipping over to the top side. So about 7:30. So I'm going to drop down to the 5 minute and I'm going to look at these waves. Here's one, chop, chop, chop. Here's one. Okay, it looks like to me we had a new wave right here that began and didn't retrace much. So I would have been looking about right here. It was getting close to that key level where we know that because it's such an obvious level of resistance and area and barrier, we're probably going to get a little more pushback there. So even though it was very bullish, you did get that pushback to 50%. Let's see if the time of the day is good. Time of the day was 7:15. It was probably about 7:30 before the money tipped over to the top side a little bit. So that one would have been a little bit tricky, but with some experience, you could have done that and rode this next move up right here. Obviously, anytime you're coming into a really obvious barrier, there's going to be some risk. So you'd like to, basically get in and out of the trade before you get in that area because there's usually going to be some sell orders. Now, this is looking very favorable right now. There was clearly enough buy orders to hold above this level, and you can see it's holding right to the pip above it. So the buyers have an advantage right now. Now, let me drop back to the 30 minute and say that what you would need right now is for price to make another move right here above 57.43, and then you've got plenty of room before you reach that next important level at 5804, which is, you could essentially call 5800. So there'll be some sell orders in this area. So there's room to get into trades, and the sentiment this morning is bullish. All right, so let's move over to the euro. You can see our major low is here at 23.67. It's a little lower than that, but the common area where the buyers and sellers resolve at 50% is 23.67. So I'm going to zoom in on that. So that's the ultimate low. I think, before I get out of there, I think, again, we're going to have to watch 2,400 to 2,500 and watch those fundamentals to see if there's any indication at all that we can make another move. Now, long term, when we're looking at the vision of 3 and 4 years out, we're probably looking at this going for sure. Medium term, we don't have the fundamentals in place to take this next leg down to 122.50, but we'll keep watching for them. Now, since I drew these lines and started before I started the show, I want to show you what I was looking at. First of all, you can see a trend channel right here. This is just lower lows, lower highs, and this one shows the lower channel with the lower lows, price making lower lows, and it was making a lower high. And before the show, I actually I started putting together thoughts on the show about right here, but it looked like it was going to break this level. This is also a supply line using TD points at this point and at this point. And this showed where the likely balance would be at 50% between the buyers and sellers. And you can see it's bullish, but held right there to the pip on that line as it came back to it. So in this case, we've got the balance of buyers tipped to the upside now, favoring the buyers over the sellers. Drop down to the 5-minute chart. Let me get out of there. And so what I'm looking at here is I'm looking at strength. So first of all, how far is it moving and how strong is it? That's only about 11 pips. And let's see, does that pull back? I don't think it does. Let me see. Okay, so it doesn't pull back there. It pulls back right there. So it makes a move of about 20 pips and then pulls back to 38.2 and pushes again. This is that behavior you'll see me, looking for over and over again. Let me just show it to you visually. Clear price move on a trend advance, pull back, second push. Now this particular type of strategy that I'm showing you here right now, it's really was created for unstable market conditions where you really had to be exceptionally good at what you do, especially if you're an inexperienced trader trying to put the odds in your favor. And so this is incredibly accurate, kind of almost surgical accuracy, these techniques right here where you're looking for a trend advance, a clear price move, a pullback, a second push, and have that range of advance be something that gives you enough room to get in and out of trades. In other words, to manage your risk well. So this is played out right here, right now. So we're going to need a move. I'm going to drop back to the 30. I like to see price reconcile on the 30-minute between the buyers and sellers. That you can see that they're kind of holding at this level. So I'm going to pull back and say that this right here is the important level, 124.85. Keep in mind, there's probably going to be some sell orders sitting in the area of 2,500, but we'll see. We'll see. It's a new week, so we'll see. But there will be definitely some orders sitting in the 2,500 here. So I'd like to see price move above 24.85 right now with some strength, and then watch and see how it does around that 2,500 level. Let's see. I do want to announce again that in a week or so, we're going to be releasing our 3 new training packages. You can take a look at what they look like on forexartofwar.com. But we're going to do something special for the Christmas holiday. So if you've been considering some great training, I guarantee you're going to love what we do. If you don't, there's no risk. We refund your money. So it's some, I teach you these techniques, medium-term trading. I'm going to be unfolding long-term trading now that we've got some impetus for long-term trading. But that's about it this morning. Remember, you can go to my website and also just get free books. Let me show you that again real quick. Over on my website, just forexartofwar.com. Just enter your name and email. I might send out an email every 7 or 10 days. I'm not really big on email. I think it's really unreliable, and you can get off the list anytime you want. But you can get these 2 books, 8 Things They Don't Tell Forex Traders, and the first battle, and I think you'll really enjoy them. We've had tens of thousands of downloads. All right, so that's pretty much it for now. To members and on our trading team, I'll see you guys coming up in about 40 minutes. We'll get together in our live trading room. Everyone else, I hope you got just one thing that helps you with your Forex trading this morning. Everyone have a great one. Cheers.